What does the phase line break mean? What does the natural progression of price move? This is how I go by into the chart consistently in any pair that I go, in any trade pair setup that I am looking. I want to speak with one trader today. I don't know if it's you or someone else who wants to hear this, but by the end of this video, you have absolutely clarity on the consistent decision action that I take into the markets and which bring me profitability with good output in the marketplace. I'll be demonstrating into the chart work by showing you what I do have on my watch list as for today. And by the end of this video, you know absolutely what I mean. Now, a lot of traders normally ask and they want to know on how they can come with a consistent outcome in terms of the decision process making to have good profitability, taking good trades and avoiding unnecessary or bad trades, to put it simple. Now, there is a formula that I normally use in each time frame that I go by, and today I want to explain it to you. And let's start off with Euro JPY. This is an example that is live and the one that I'm looking for today. But what I've decided to do is to prepare for you to understand what I normally do in terms of my forecasting. Now, from the daily time frame, I normally look mainly on three things. I look on the area, I look on the structure, and I look on the candlestick. What are they telling me? The message behind that they carry and they tell. Now, in this particular formula, if I have 3 out of 3 of these things that I've mentioned, and it happens that they support the movement that I'm looking in the first place, that is when I have a high probability setup. Or if I have 2 out of 3, that's when I have a high probability setup. However, it differs because sometimes a high probability can be a valid trade or setup, to put that simple, and I'll explain it. So let's start together here. Now, from the daily time frame, we can see clearly that we have this structure. And which kind of structure is this? This is a clear ascending structure, right? Others can see it as a expanding structure, right? But for me, I see it more of an ascending, right? Now, what is the reason behind and what is the message behind this ascending formation? We normally know when ascending formation are at a good area value, they always give us a message that we are likely to reverse or turn around to the downside. So we have a clear ascending formation with this 1, 2, 3 touch and a clear middle section. So we are good on the structure because we started off with area, structure, then candlestick. Now let's go on the candlestick. What do we see on the candlestick? We see that the candlestick are completely, as we can see, that they have already approached at earlier value, creating that completion in this price 1, 2, 3. So the candlestick are good and they are complete in this scenario, and they are confirming that the complete of that particular structure that we are looking is already good. Now you'll notice that I haven't mentioned something called area. And in this example, if I just minimize even the screen or the chart, you cannot see any area that is supporting this particular structure, right? And it's kind of rise the ambiguity, so we don't have the area. Now, the fact that we do not have the area, these trades become more valid, despite the fact that we can understand the volume that is created from this particular structure is what will cause this to move to the downside if it's going to, right? However, it's not supported by any area of volume. And what do I mean by area volume? I want to keep it simple. When we speak about area volume, we mean the area where there is enough liquidity to support the structure and the movement in price to move in the direction that it wants to move. And when we speak about area value, it means on the lower time frame. Area value is more about the lower time frame. That's how I see it personally. And when we speak about area value, we mean that are the areas within the pattern or continuation or reversal according to the lower time frame that we see is a good area for us to enter in the market. That is why we call it area value. So from this scenario, we can see that we are supported for the price to move to the downside just based on the structure that we have. Then if we move to the H4 time frame, how do I use the H4 time frame? I use the H4 time frame to confirm and to support what I have already seen from the daily time frame. And from this example, we can see from the H4 time frame, we have this squeeze at the end of the run of this particular price, right? We can see there is a squeeze over there, which makes it to give us a confirmation that when we approach at the area value into the lower time frame, we normally look on the area if we approach there impulsively, correctively, or structurally. And from this example, we can see that we approach correctively. And we know what do we need to do? We just need to wait to see if the price is going to break below, meaning to retrace back in, and then to give us that particular continuation, which will be confirming our direction for the next run to the downside. So this is what we call phase line break. And one will ask me, what does the phase line break mean? Okay, what does the natural progression of price move? It moves in terms of the impulse, correction, impulse, right? Now, if that is the case, then we are very clear on that. We need to ask ourselves, how did we approach in this particular area? We approach correctively. And if we approach the correctively, and the message behind this particular structure we know is a 1, 2, 3 and is ascending, and we have approached correctively, it means that what is the next movement within the price? Is an impulse. So the impulse will be into the opposite direction, which means we had the phase of an impulsive movement, then we had a phase of a corrective movement, and now we are anticipating the phase of price to move to the downside impulsively. That's why we call it what? Phase line break, which is confirming and supporting our movement to the downside. Now let's move into the H1 time frame and see what we are looking over here and what the message behind it. Now the H1 time frame is normally my entry time frame. I always look for the setup within the H1 time frame. Okay, so that's the time frame that I normally look to execute position, because if the H1 allows me to go to the 15, it's fine. But more often than not, the H1 time frame is more than enough for me to take this trade setup. So here from the H1 time frame, I have two mainly ways that I can take this particular setup. The first way is that I can still take that as a phase line break, meaning that I'm looking to take advantage of that break in price with a little bit wider stop loss, okay, and then take advantage of that. This first inflection point, we're running around 3%, which we can still manage this particular position. If not, then we will just wait for the price and see what we can do. The second way that I can take this particular setup is that I'll be waiting for that push to the downside and then taking the first continuation below this rail line area, if it's going to be a risk entry or insurance entry, that remains to be seen. And the third way that I can take this one is by deleting this and then deleting this, because over here I already see there is a price extension in price. There is a pattern within a pattern, okay? And if I go to the 15-minute and show you this, you'll see it more clearly, okay? You see it more clearly. This is acting more as an expanding with this clear middle section. And now we are just waiting for the price to do its thing so that we can take advantage of that. So basically, I can take either one of those. So in this example, I'll be waiting for the next candle close to just confirm on how it's going to close, because this is already an entry within itself, but it doesn't bless me that much. It's a little bit trickier, but to be more in the safer side, to go for the risk entry, I'll be waiting for the next candle close to see if we can take advantage of that. So if we close with next bearish candle, even if it closes like so, then I'll be taking there the risk entry with my stop loss just above over there, and then that being my first area of inflection, which I can move to break even around these rolls. We are running around 3%. So technically, there is still an opportunity over there, and we just need to wait for the price to just confirm to us by the candle itself. So either ways, you can take that. You can take it either as a phase line, you can take it as a risk entry within the pattern that we have seen that has developed, which we are just waiting for the 1 hour close, or wait for the push down and a continuation flag. So I'll keep you posted within this particular setup and tell you what will happen next and how I executed the trade if I took the trade. So what I'll be waiting and favoring is to see that. And for those who want to know the validity of this particular setup, is that we were not backed up by area of volume from the higher time frame. And keeping that in mind, the price can still do this acting as an impulse, this as a correction, and still it can move to the upside. That's what makes this particular setup valid. So this is how I go by into the chart consistently in any pair that I go, in any trade pair setup that I am looking. These are the exactly steps that I normally take, and they have brought me this far to gain the consistent within myself, the consistency within the marketplace, and most importantly, the profitability in terms of the payout. Until next time, don't forget to like, subscribe, and share the video with others, because that is how you can support us and support our channel. And by the way, before we end, I wanted just to tell you that 7 Principles FX is live, and if you want to have more details about it, message us on WhatsApp or on IG, and we'll link together over there. Until next time, God bless.